You heard about Bitcoin, maybe even Ethereum. But did you hear about the speed demon of cryptocurrencies? His name is Solana. Today, you will learn about Solana's entire history, from early days through all steps that led Solana to the top 5 most valuable cryptocurrencies. And as every video on Bitcoin Academy, this one is also 100% beginner-friendly. So, without wasting more time, let's go back to 2017 and explore the very beginning. While Bitcoin dominated headlines and Ethereum was fueling ICO mania, a former Qualcomm engineer named Anatoly Yakovenko had a different idea. He was frustrated with one core problem. Blockchains were just too slow. Drawing from his background in distributed systems and wireless technology, Anatoly proposed a radical solution, something called proof of history. Unlike Bitcoin or Ethereum at the time, which relied on block times and miners or validators waiting their turn, proof of history introduced a cryptographic clock that could timestamp events automatically and in order. No waiting, no guessing. This would allow thousands of transactions to happen in parallel, drastically speeding things up. In November 2017, Yakovenko released the first white paper outlining this idea. He soon teamed up with Greg Fitzgerald, another Qualcomm colleague and low-level systems wizard, to build the initial prototype. When it worked, they knew they were onto something. Soon after, Raj Gokul joined to help shape the business and product vision. Together, they assembled a team of engineers and early crypto believers with one goal: build the fastest blockchain on Earth. By late 2018, the trio officially launched Solana Labs, the company that would drive protocol development. The name Solana itself came from a small beach town near San Diego, where the founders used to surf. With the technical blueprint in place and a lean but ambitious team, Solana Labs set its sights on creating a high-performance Layer 1 blockchain that could one day rival centralized systems in both speed and cost. At a time when most chains were still figuring out smart contracts, Solana was already designing the rails for Web3 to run at internet scale. The foundation was laid, and the speed demon was born. It was time to bring the idea to life, and that is exactly where our next topic leads us. After laying the theoretical groundwork and assembling a high-caliber team, Solana Labs entered the next critical phase, turning vision into reality. In 2019, the team launched a public testnet known as Tour de Sol, designed to push their new consensus model to the limit. This wasn't just a small-scale demo, it was a full-blown stress test for the real world, aimed at proving that proof of history combined with Tower BFT, Byzantine fault tolerance, could support massive throughput without sacrificing security. The crypto world started paying attention. Solana began raising capital from top-tier investors like A16Z, Andreessen Horowitz, Multicoin Capital, and Coinbase Ventures, eventually completing multiple funding rounds, including a substantial Series A. This influx of capital helped scale the engineering team, refine the protocol, and prepare for launch. Then came the big moment. In March 2020, Solana Mainnet Beta officially went live. While labeled a beta, it was fully functional and already demonstrating something few blockchains could: up to 65,000 transactions per second with near zero fees. That wasn't marketing hype. It was a glimpse into what blockchain performance could look like in the future. What made Solana's launch different was its monolithic design. Unlike Ethereum's modular, layer-heavy approach, Solana chose to integrate everything into one layer: consensus, execution, and data availability, all on-chain. This allowed for blistering speed, but also introduced high hardware demands, which would later become a topic of debate. Regardless, the early launch phase was a success. Developers now had access to a new kind of blockchain, one that felt closer to internet infrastructure than the clunky systems they were used to. The speed demon had left the garage and was already tearing up the track. And as you might expect, the next step was to start building the ecosystem around it, which takes us into our next chapter. Once the mainnet was live, Solana's next challenge was clear: build an ecosystem that proves the tech is useful. And that's exactly what started happening between mid-2020 and early 2021, a period that would lay the groundwork for Solana's explosive rise. To support growth and adoption, the Solana Foundation was established. Its mission? Help fund developers, encourage global adoption, and promote ecosystem tools. Backed by grants and partnerships, the foundation began onboarding the first wave of builders who were eager to test what this speed demon chain could do. One of the earliest and most important projects was Serum, a decentralized exchange, DEX, built by FTX and Alameda Research. Unlike Ethereum-based DEX that suffered from high gas fees, Serum on Solana could execute trades at lightning speed and microscopic cost. This wasn't just a nice to have, it was a game changer for traders and liquidity providers. Serum became a major validator of Solana's tech, attracting even more attention from developers in the DeFi space. At the same time, Solana's developer activity surged. More dApps, decentralized apps, were launching, from early NFT experiments to DeFi protocols and infrastructure tools. Integrations with USDC, Chainlink, and hardware wallets created a more complete toolkit for users and developers alike. Projects like Phantom Wallet began emerging during this period too, making Solana more accessible to the average crypto user. For the first time, Solana had the basic components of an ecosystem: fast chain, active builders, liquidity, and user-friendly access. By early 2021, it was becoming clear that Solana was more than just a fast blockchain. It was shaping up to be a serious contender in the Layer 1 wars. And that set the stage for the next phase: Solana Summer, a term that would soon take on legendary status. What came next was nothing short of explosive: the rise of what the crypto community would dub Solana Summer. Starting in mid-2021, Solana went from promising new Layer 1 to one of the hottest names in crypto, attracting developers, traders, NFT artists, and VCs in waves. So what exactly made Solana Summer so iconic? First, the DeFi ecosystem exploded. Total value locked, TVL, in Solana-based protocols surged as projects like Radium, Saber, and Orca gained traction. With super low fees and lightning-fast execution, Solana gave traders and yield farmers a new playground, one that didn't cost $50 per transaction like Ethereum did at the time. Then came the NFT boom. Platforms like Solanart and Digital Eyes emerged, launching collections that would become Solana blue chips: Degenerate Ape Academy, Solana Monkey Business, and Aurori, just to name a few. What made this unique was the user experience. Minting NFTs on Solana was fast, cheap, and simple. This drew in a flood of newcomers who found Ethereum's gas fees intimidating. Of course, all of this led to one thing: a massive price rally. Sol, the native token, skyrocketed from under $30 to over $250 in just a few months. It entered the top 10 cryptocurrencies by market cap, and major media outlets began calling it the Ethereum killer. But it wasn't all smooth sailing. For the first time, performance cracks began to show. High-demand events like NFT mints triggered network slowdowns. Still, the community largely saw these as signs of success, growing pains from rapid adoption. In short, Solana Summer wasn't just a meme, it was a breakout moment. It proved that Solana could host real apps, attract real users, and handle serious demand, all while making crypto faster and more affordable for the masses. But every story has its problems. So does this one. Now we enter one of the most challenging chapters in Solana's journey, a time marked by growing pains, technical failures, and questions about the network's future. As incredible as Solana Summer was, it also brought the first true stress test of the network. In September 2021, the blockchain suffered a major outage lasting 17 hours. The culprit? A flood of spam transactions, over 400,000 per second, triggered by bots during an IDO, initial DEX offering. The network simply couldn't handle it. Validators fell out of sync, consensus broke down, and Solana had to coordinate a manual restart with its community. This was more than just a hiccup. It was a reality check. Developers, users, and critics all asked the same thing: is Solana too centralized? After all, the coordinated validator reboot and the high hardware requirements had already sparked debate. Many pointed out that running a full Solana validator required far more powerful machines than other blockchains, potentially making it a playground for well-funded players rather than a truly open system. And yet, despite the criticisms, user activity kept growing. Wallets like Phantom continued to gain traction as the go-to interface for NFTs and DeFi. People loved the speed and low fees, even if the infrastructure needed more work under the hood. But congestion issues didn't go away. In fact, 2022 brought more minor outages, particularly during peak traffic events like popular NFT drops. Solana developers scrambled to optimize the network and introduce patches, but the perception was taking a hit. The question hanging in the air was simple: can Solana scale without falling apart? Still, it wasn't doom and gloom. The community stuck around. Builders kept building. The user base remained passionate. But the honeymoon was over. Solana had entered the prove-yourself phase, where performance had to catch up to ambition. Next, we head into even darker territory: the collapse of one of Solana's biggest backers, and the fallout that shook the entire ecosystem. The next chapter in Solana's journey was not a technical failure, but a shockwave from the broader crypto industry, and it hit closer to home than anyone expected. In late 2022, The collapse of FTX, once the second largest crypto exchange in the world, sent ripple effects across the ecosystem. But for Solana, it was more than a ripple. It was a tsunami. Why? Because FTX and its sister company, Alameda Research, were two of Solana's biggest backers. They had poured significant investment into the Solana ecosystem, launched major DeFi projects like Serum on its blockchain, and heavily promoted Solana as part of their broader vision. When FTX imploded in November 2022 amid fraud allegations and a liquidity crisis, confidence in anything tied to FTX vanished, including Solana. The results were brutal. Sol's price dropped over 60% in just a few days. Billions in value were wiped out from the ecosystem. Developers and users panicked. Projects like Serum had to be restructured, and anything with even a slight FTX connection became radioactive overnight. The damage wasn't just financial, it was psychological. People questioned whether Solana was truly independent or if it had relied too heavily on FTX's support. Critics resurfaced concerns about centralization. Headlines proclaimed Solana dead or dying. And yet, amid the rubble, the chain kept running. Solana's core community, the devs, the validators, the builders, didn't leave. In fact, some saw the collapse as a chance to start fresh. Without FTX's influence, the project could finally prove itself on its own merit. The moment was dark, but the fire hadn't gone out. This event marked a turning point. Solana was no longer the darling of VCs and influencers. It was a survivor, forced to rebuild from the ground up. And what came next was a story of resilience, decentralization, and rebirth. After the storm of the FTX collapse, many expected Solana to fade. But instead, something unexpected happened, a grassroots resurgence. 2023 became the year Solana proved it wasn't just a product of hype and VC money. It was a project with real builders, real users, and a community that refused to quit. Developers stayed. Not all, but enough. And new ones arrived too. The open source spirit kicked in, with teams forking FTX-related projects, rewriting code, and restoring user trust. Serum, once tightly linked to Alameda, was revived by the community. The blockchain kept running, and people kept building. The ecosystem slowly pivoted away from centralized dependence. Grants from the Solana Foundation, community-led events, and open hackathons started to shape a more decentralized culture. Instead of relying on a few dominant players, the spotlight shifted to dozens of independent projects, many of which had nothing to do with FTX. Notably, several Web3 powerhouses began migrating to Solana. Helium, a decentralized wireless network, moved from its own chain to Solana to improve scalability. Render Network, focused on distributed GPU computing, followed. HiveMapper, a decentralized mapping platform, also chose Solana for its high throughput. These were serious, real-world use cases, and they brought credibility back to the chain. Solana's reputation started to rebuild, not because of price action, but because it refused to die. Builders were no longer just chasing hype. They were laying bricks in a quieter, more resilient version of the network. By mid-2023, the tone around Solana had shifted. It wasn't about flashy launches anymore. It was about earning respect. And that's exactly what it was starting to do. And that brings us to our next topic. With momentum slowly building again, Solana began preparing for its most ambitious leap yet, solving its lingering scalability challenges once and for all. Enter Firedancer, a high-performance validator client being developed by Jump Crypto, one of the most prominent trading and infrastructure firms in the space. Until now, Solana's biggest technical criticism had been its network reliability during high demand. Although it boasted massive throughput, its single validator client, built by Solana Labs, was prone to bugs and bottlenecks. Firedancer aimed to fix that, not just by patching issues, but by rebuilding the client from scratch in C++, with performance and modularity at its core. The vision? To enable hundreds of thousands of transactions per second, with true redundancy, robust performance, and a drastically reduced risk of outages. What made Firedancer a game changer wasn't just speed. It introduced client diversity to the Solana network, a critical component of decentralization and resilience. With more than one validator implementation, the risk of a single bug crashing the whole chain was dramatically lowered. This brought Solana closer to the standards of major systems like Ethereum, which already benefited from multiple independent clients. Throughout late 2023 and into 2024, development on Firedancer accelerated. Public demos showed eye-popping transaction benchmarks. The Solana Foundation poured resources into research and testing, ensuring Firedancer would integrate smoothly into the validator ecosystem. The narrative shifted. Solana wasn't just rebuilding, it was future-proofing. Firedancer became a symbol of long-term scalability, drawing interest from infrastructure providers, validator operators, and institutional partners. For a network once mocked for crashing under pressure, Firedancer offered redemption and a clear signal that Solana wasn't just aiming to survive the next bull run. It was building to dominate it. And that brings us to 2024. With scalability upgrades like Firedancer underway, 2024 marked a turning point, not just in Solana's infrastructure, but in its application layer. This was the year Solana's comeback truly took shape through NFTs, gaming, and mobile, signaling a pivot toward mainstream, user-facing use cases. Let's start with NFTs. After surviving the 2022-2023 crypto winter, the NFT scene on Solana bounced back strong. Collections like Mad Lads, Tensorians, and Claynosaurs gained popularity, while marketplaces such as Magic Eden refined their platforms and solidified Solana's role as a hub for digital collectibles. The fast, cheap minting experience made it a preferred chain for creators and collectors alike. But Solana wasn't just a playground for JPEGs. Gaming also began to mature. Projects like Star Atlas and Aurori entered new development phases, showcasing real gameplay and blockchain integration. Other Web3 native titles began to emerge, capitalizing on Solana's ability to support real-time in-game economies without lag or high fees. With Web3 gaming still in its early days industry-wide, Solana positioned itself as a high-performance backend for next-gen interactive platforms. Perhaps most notably, Solana Mobile launched its flagship device, the Saga smartphone. This wasn't just a crypto phone. It featured a built-in Solana wallet, dApp store, and seamless integration with blockchain apps. The idea was bold: turn mobile devices into native Web3 platforms. While initial adoption was modest, the move set Solana apart. No other major blockchain had ventured this far into hardware. All of this showed that Solana wasn't content with just rebuilding. It was expanding. NFTs, games, and mobile tech brought users back and gave developers clear, tangible platforms to build on. In 2024, Solana didn't just run fast. It started to run everywhere. All right, we covered past. Let's see where we are today. By mid-2025, Solana has completed a remarkable transformation from a fast but fragile blockchain to a full-fledged, resilient ecosystem. It's no longer chasing Ethereum's shadow. Instead, Solana has carved out its own identity as a high-performance platform powering consumer-facing Web3 apps across gaming, payments, social, and mobile. With Firedancer now widely adopted, the network boasts unprecedented scalability and uptime, finally resolving the reliability concerns of its earlier years. Decentralization has also improved, with a broader, more diverse validator set and multiple independent client implementations. This technical foundation has enabled the next wave of innovation: mobile-native dApps, real-time blockchain games, NFT-rich platforms, and even payment systems rivaling traditional fintech in speed and cost. Solana Mobile continues to evolve, pushing the vision of Web3 in your pocket, while projects across verticals, from decentralized finance to creator tools, thrive thanks to low fees and seamless user experience. SOL, the native token, has made a strong price recovery, reflecting renewed trust from both developers and investors. But the competition hasn't disappeared. Ethereum, Layer 2s, and emerging chains still vie for dominance. Solana's edge lies not in being first or biggest, but in being fast, accessible, and now battle-tested. From chaotic outages and existential crises to a stable, expanding ecosystem, Solana's 2025 is no longer about proving itself. It's about scaling what it already does best. The speed demon hasn't just survived, it's evolved into a powerhouse. And now, let me congratulate you for making it this far. Now you know about Solana, more than 90% of people involved with world of cryptocurrencies. If you wish to continue your education and dominate inside this space, I would recommend watching one of these two videos you see on the screen right now. I truly hope this video was helpful. If yes, please leave a like, comment your thoughts, and don't forget to subscribe. See you in my next video.